Hello, good afternoon. My name is Anne Iveson and I'm here at the Collar Institute 7th Symposium, Battle of the Asset Classes. And joining me now is Philip Bassett, partner from Permira and head of investor relations. Thank you for joining me, Philip. We've heard a lot today actually about how white hot, super white hot, some people have said, the industry has turned in the terms of comparing it to the highs of 2006. But what are your thoughts about that? And specifically, what is the financing environment out there like? And what are LPs' major concerns and what are they asking you now?
Thank you. I think that's a very good question. I think there are a number of different fronts on which you can analyse sort of the current market sentiment. I think in terms of leverage multiples and overall generic multiples being paid for assets, it's true they have been creeping up to sort of near sort of 06, 07 highs, really driven by a return of sort of yield-hungry investors who are prepared to buy leverage loans. I think that doesn't tell the full market story though. I think in terms of the individual index of deals done, you'll see a very, very wide range of multiples being paid. So in more competitive auctions for, say, larger assets in Germany, you can see EBITDA multiples of 15 plus being paid. But in less competitive, less well intermediated deals, I think you can still see sort of 8.5. So it's very difficult to generalise about the market. And from a fundraising perspective, I think there's a very different dynamic in the market. So we heard on the symposium today, some people talking about a return to a much more favourable fundraising environment. We can't see that across the market. So I think what you're seeing is sort of the haves and have-nots. The days of sort of the easy fundraise are over. And I think they're here, that the new paradigm, if you like, is here to stay. So you're not going to see the return of 3-month fundraising processes. Even the first and final closes have been pre-marketing for months, if not years, before they go out to the market. And people who have any issues with long-term track record will really struggle to raise money. So it's a funny market because you've got different supply dynamics in the small to mid-market, the large end of the market, especially in Europe. You've got very ebullient financing markets. But then obviously you've got investors who are very keen on GPs retaining focus, making sure they don't repeat the mistakes they made in 06. And so probably you're seeing a lot more resilience in the nature of the businesses being bought, hence higher prices.
Thank you. And are there any sort of specific questions at LPs? What are the 3 key or recurrent questions that you hear from LPs these days when you have your discussions?
Well, I think the market is one of the keys. So especially if you have been through the sort of 06 to 09, 10, 11 period where they saw public markets shrinking at very rapid rates. They saw covenants being breached. They saw mezzanine funds being wiped out in terms of their own security. And so they're very keen on that not being repeated. So they're very focused on what lessons you learned from a more robust market. But then on a sort of more micro basis, they're very keen on the team, the alignment of the team with themselves, which I think is very valid. Team turnover has been a big issue, especially I think the lessons of the last decade have afforded a great opportunity for some firms to refresh their teams, whereas LPs sometimes don't like that so much. And sort of economics and terms have become very much front of mind, so they want to see real alignment between the GP and themselves.
Thank you very much. Thank you very much for joining us again at the symposium, and hope to go and see you soon.
Good.
Thank you very much. Thank you. Thank you.
Bye-bye.